Hi, welcome everyone. Let's go through today's price action analysis of Bank Nifty futures using 1 minute candlestick chart. This is 16th of November 2016. You can see that there's a big gap up, so possibly bullish sentiment, but it is within yesterday's range that was established. This is yesterday's low. This is where the price opened, so that's days open, right? But the bar closed bearish. Bears controlled bar 1's move and it closed near its low. Bar 2, what is the response to bar 1, right? Is the bar bullish or bearish will determine how the move is going to pan out, which is there a continuation of this bearish sentiment or bulls are able to hold. Bar 2 closed at its high, so strong bullish sentiment, but it is within the range of bar 1. It could not cover the distance that was covered by bar 1, and days open is still not yet reached, which is where the possibility of resistance being shown or found is high. Bar 3, this is where you need to be ready or anticipate. Now you know that it's a strong gap up but failure, right? What you see next is bar 2 is an attempt by the bears to fail this failure or bearish sentiment, right? Now if the bar 3 appears as a decent looking bearish bar, not always a strong bar, at days open the price fails, you need to anticipate that setup and be ready. You cannot, with this kind of a trading that I'm talking about, it's a 1 minute candlestick chart, it's all very fast. You have to anticipate setups, be ready, be nimble. You cannot do it after the bar has formed. There's very little time for you to think and execute, right? It's hardly a second or two, that's it. So you have to be ready. Like in this case, if the bar 3 is a decent looking bear bar, I'm going to short. Why? Because bar 1 is clearly telling you that the bears are have started it as a bearish sentiment. Even after this strong gap up, the breakout failed. Bar 2 did try to hold it for a while, but if bar 3 immediately fails, there's no continuation of bullish pressure, right? And days open being an important level, you're anticipating that if you get a setup or bar which is bearish one, which clearly tells you that this is first attempt by bulls which failed, and this is the second attempt by bulls which is failing, so definitely that's what you're betting on, right? So the moment this bar formed and you anticipated it clearly, you were ready to place short order below this bar's low, right? Now, depending upon how fast you can act, it may not be exactly where you wanted it, but that's fine. The point is to get into the trade, into the right trade, right? Based on your analysis, right? Based on the right context understanding and not based on emotions. So here you got into short trade on bar 4. That's where you can clearly see if it is a good trade, it almost always gives you a strong entry bar, almost always. In market there's never 100%. Sometimes it might give you a tail or bar that goes against you for a while, but it still continues. But most of the time, if it is a good entry, good setup at the right location, it will almost always give you a strong entry bar. Additionally, you need to observe subtle important points, like this is bar 1's close, right? If somebody sold the close of this bar betting on the failure and it stalls in this zone around in this area, the line that I have drawn here, which means bears are weak. But what happened is that it got cleared in one shot, right? The bar closed far from that level, so which means bears are strong enough, right? So you enter below this bar, risk is 10 points and reward, depending upon how much you're comfortable with. It could be 3 hour, 30 points, 4 hour, 40 points, 50 points, depending upon what your profit booking methodology is. But at least go for 2 hour. Okay, this one you entered 550. This bar itself gave you around 40 points or 30 points for sure, and this one definitely gave you more than that. So you could get out of the trade on this bar itself, or you could hold on for more. Now, how do you decide how much time to wait, right? And for that, what you can do is you can use concept called measured moves. Again, these are not my concepts. You'll find these being explained in various books. Especially, I have learned this from Al Brooks, brookspriceaction.com or brookstradingcourse.com. You can go to these websites and find it out on this website or through his books. So what I'm looking at is, this is the first bar. I'm going to take this bar's height, which is around 80 or 85 points. Okay, and then project that, okay, which comes out to around 445 or something like that. On this bar, it did not go that far, so you can wait. So you're going for a measured move, and that's how the trade works. For the experienced and smart traders, it's all about maths, and only the beginners or amateurs treat it as a gambling exercise. But that's not how it works. It is a calculated exercise that is being done by all the experienced people, and that's how they draw these levels or arrive at numbers, right? So measured move concept is what you can use for profit booking. So from this level, you can draw the height of this bar and you project it down, and that's the movement that you're looking at. Now, this is the first trade based on the analysis that I explained, right? This is an attempt by the bull, but it did not continue. Okay, it was knocked off immediately. The moment I see some pivot highs and pivot lows, or uh, swing highs or swing lows, I draw lines. So I join these 2 points, extended, and then I drew a parallel. That gives me an idea about if there is a channel that is forming, because price action respects all of that. Now, you can see that this was knocked off, this bullish sentiment. Some bulls try to buy it here, and then they were surprised, or they were not able to sustain. When they saw this bearish bar, some scaled in on this zone and gave up there. And this is the first pullback in this bearish move, because this is a sustained bearish move. Okay, this is the lower high and lower low, lower high, lower low, in the context, of course. Okay, in the morning, in the absence of this higher high, higher low, or low high, lower low, I'm always going with a sustained move, considering that as a trend. Right here, as a bearish move is sustained, I can clearly see that bulls are not able to hold the ground, so it's a bear trend for me. And this is the first pullback. Why this is the first pullback? This is the first bar which is going uh, pulling back, and it made an attempt to go above earlier bar, right, and it failed. This is the first pullback. You can see that the signal bar is really good. You go short below this bar. First pullback is a swing trade, so you have to go for at least 2 hour, but I would recommend in Bank Nifty it has to be at least 3 or 4 hour and beyond, right? And then bearish move continued. It was not that fast or aggressive like this one, or at least it continued. You could, I mean, this was 470, that's where you got short, and you could have gotten already more than what you wanted from this 3, 4, 5 bars itself. Or you could wait, it being a swing trade, and then it continued further down below yesterday's low. You can see that, right? This is a breakout test attempt that clearly shows that bear move was strong enough, right? This is where it failed. This is where the trade was initiated by short, and it continued below yesterday's low. Okay, that's it for today. Thanks for listening in. Thank you.